So the question really is, are you screwing yourself over in your trading? And I'm not talking about with the mistakes and, doing things that hand money back to the markets. I'm talking about from the get-go, even just the way you're getting into your trading from a business investment perspective. Are you even getting into it like I said from the beginning? I mean, let's take a look at it. If you were buying another business, the business is going to be worth something. You expect it to generate certain revenues. But one mistake people make when they look at buying another business is they don't account for certain things that business needs to produce. I mean, of course, it needs to produce a profit, but that profit needs to take care of the company. It needs to return, it provide a return on your investment capital that you put into it. But if you're going to be working there running the business, it needs to be paying you for your time. And if you had to borrow money, to capitalize the business, which often happens, when you're buying a business, investing in a business, covering that debt service. So let's assume that, yeah, you're not borrowing money, but you still need to get a good return on your capital, sufficient, better than you would get elsewhere, because otherwise you have an opportunity cost here. But you really do need to be getting paid for your time. And of course, yes, it is going to take a little bit of time at the beginning where, yes, you're investing more time than would be normal because you're getting the business up and running. But that really shouldn't take very long. And even then, you should still be getting paid for your time. Your time, your labor has value. Now, here's a perfect example. Let's say, you're doing your trading and you have a goal of making $100 a day. Okay, $100 a day. Well, let's see, if you're working an 8-hour job, $100 a day, that's $12.50 an hour. Do you really want to be working for $12.50 an hour? And that's not even counting, a return on your capital. That's just paying you for your time. Okay, let's say you're only investing 4 hours a day, which really isn't realistic, because if you're a trader, you have your time in front of the charts, but you have your prep time, your after time where you're reviewing your trades, journaling, you're thinking about your trading. It's occupying more than just the time that you're actively trading. So your time investment for your trading, for a lot of traders, even part-time traders, yeah, it's still 8 hours a day plus. And again, are you getting paid for that time, or would you be better off? I mean, heck, you can make $25 an hour mowing lawns, or waiting tables in a restaurant, tending bar. I mean, there's tons of entry-level jobs that you could just go do today and make 20 or $25 an hour. Plus, again, with your trading, you have your money at risk out there. Are you being properly compensated for the risk? So, let's take a look at, if you were investing in another business, you would want that margin, that profit margin, to be fairly significant, right? I mean, you wouldn't want to like open up a restaurant and be rolling $100,000 through that restaurant every month, only to realize, $2,000. No. 2%? No, you wouldn't want to do that. You'd want it to be up around 5, 8%, right? Minimum, preferably higher than that. I mean, if you look at some companies, their operating margins are a lot higher than you would think, even for big companies. And here's a perfect example. I heard this years ago. It found it to be absolutely true. PepsiCo. They had budgeted in their annual budget, 35% of their revenues went to marketing. So they had a big enough margin to cover all their operating expenses, all their cost of goods, everything, and then still have 35% just for marketing, and then making a profit on top of all that. So their gross margin was huge, still is, and Coca-Cola. And that's why Coca-Cola is one of the top companies in the world. Their margins are insane. They're not working for, 8% a year or 10% a year. They're making way more money than that. Are they reinvesting it? Of course. But I'm just saying their margins, on the onset are crazy. And so, as a trader, you're putting your money into this business. You want to have, especially since it is a risky business, you want to have a pretty good return on your capital, and not just a few percent a year or even a few percent a month. Really, seriously, if this was a business, you would want to be making a pretty decent margin by the end of the year. And again, you have to include your time. Now, first, business lesson here. You've heard of EBITDA before, earnings before interest, taxes, depreciation, and amortization. That's generally, the profit of the business. And so, that needs to be significant and reasonable for anybody want to invest in a business. Small owner-operated businesses, there's a different term for it. It's called seller's discretionary earnings. It's like EBITDA, but you have to factor in the fact that is the owner operator You have a job and your labor needs to be factored into that right there. So let's say, yeah, with your trading, you're saying, okay, I'm going to, I'm going to put in $50,000 and, I'm getting a 20% return. That's pretty good. Hey, wait a minute, 20% a year, that's 10 grand. Now, if I'm putting in 10 hours a week, 50 weeks a year, let's see, okay, that's 500 hours of my time. And my time's worth at least 20 bucks an hour. Well, heck, there's my 10 grand. It's only covered my labor. I haven't really gotten any return on my capital. I've only gotten paid, and I only got paid 20 bucks an hour. Okay, this is what I'm talking about. This is where a lot of traders, they go into it and they don't think the numbers through, and they don't value their own time and the opportunity cost of this business. It's like, okay, are you going to get into it with enough capital that it justifies your time and provides a sufficient return? And if you can't do that, then you need to say, okay, how much of my time, my life, am I willing to sacrifice at below standard wages where I could go do something else and make the same kind of money? I'll take my capital, I'll put it over here in a CD where there's zero risk. Well, I might only make a couple percent a year, but at the end of the year, I put my capital over there, I put my time in over here, and at the end of the year, I'm ahead. I'm making more money than if I were trying to trade, putting my money at risk and not getting paid for my time. So you need to run the numbers. And so if you're trying to trade, with a $500 account, is this really the best place for you to be putting your money? Or do you need to go figure out how to run more capital? Now, this is where prop firms can come in handy. But again, let's say you have $5,000 or $10,000 and you want to get into trading. You haven't traded before, or you've been trading and you haven't figured it out yet. Well, should you really be putting your money into your own account and putting it at risk and then just trying to figure it out as you go, like so many traders do? I'll figure it out and I'll build up the account. Okay. Well, you could do that, or you could say, well, I'm going to take 5,000 or 8,000 of that 10, and I'm going to invest it in education so that I know because I have a skill deficiency that I need to fill. So I'm going to gain the skills that I need so that I really do know what I'm doing. I'm solid. I know what the heck I'm doing. Then I'm going to go over here to a prop firm. I'm going to use that other 2 grand to, get through the qualification stage with a prop firm. Then I can use their money, but now I've invested in myself for the skills and I can use their capital. And now I'm getting a sufficient return on my time. Cool. That's a much better game plan. Again, you just want to think the numbers through. If you're putting your money at risk and you're investing your time, and your time is your life, don't look at it as though it's, so expendable. Oh yeah, sure. Yeah, I can put in, the weekends. I can put in the extra hours. I can sacrifice sleep. I can sacrifice family time. Is it a wise investment of your time? Or would you be better off with a whole different strategy and say, yes, I should be putting my money over here. I should be investing in myself. Am I, being properly capitalized so that even if it does work, I'm still being paid satisfactorily? Because your time has value. I mean, really, would you want to go work a $12 an hour job for 5 years? No. So don't do it with trading. Take a different approach. And if you want, swing by InsideOutTrading.com and book a call with me. We can talk the numbers through for your situation, for your available capital, your available time, and see what is a strategy that makes sense. And even if trading really is the best avenue for you, because for a lot of people, believe it or not, trading is not a good investment of your time and money. If you could put your money into it and it's just passive and you're not putting your time into it as well, yes, 20% a year is excellent, but this includes your time and it is a high risk investment. So you should be properly compensated for it. And this is just being wise with your money and protecting your wealth. Anyway, again, I hope this has been helpful. This is a business. This is an investment of yourself, your capital, your time. And so you want to do it wisely so that, a year from now, 5 years from now, 10 years from now, you're happy with the results and where you are. So I just want to help you do it right. And again, not be screwing yourself over. There's so many great opportunities that come along and they sound fantastic and people get into them. I mean, there's certain, network marketing companies that over the years have, established a reputation of, it's, they don't let, and okay, this is very sexist, but it's true. Way back in the Amway days, I remember hearing my dad say, they don't let the wives run the numbers. It's like, no, the guys run the numbers. And he said, yeah, they don't let the wives run the numbers because if the wives run the numbers, they realize it doesn't work and you won't get into it. And so, and it was hilarious because, yeah, it's like you can work your tail off and you're not making the money. And that's not what you want. You don't want to, get to the end of 2 or 3 or 5 years and realize, hey, yeah, this just was not, this wasn't going to win from the get-go. So again, I hope this has been helpful. Swing by my site, book a call with me. Like I said, we'll talk through your situation, and again, from a business perspective, from an investment perspective, just, is this, what is really best for you? And, and if not, there are other things you could explore. If this is, let's talk through how to put together a game plan for you from an investor standpoint, so that you're going into it so that, yeah, it actually is working out where, yeah, now you're happy, you're getting paid properly, you're getting a good return on your investment of your capital and your time, and you're enjoying it and keeping your risk down all at the same time. So anyway, I again hope this has been helpful. If it has, give me a thumbs up down below, subscribe to the channel, share this with your friends, and we'll talk to you soon. Book a call with me. Love to help you out. Talk to you soon. Cheers.